USDA loans have a case of mistaken identity. For customers who have a hard time getting the money together for a 20% conventional loan, or those with a few credit problems, there aren't a lot of better programs out there. So why don't people talk about it more? Maybe this is because there are some myths out there about USDA loans. So let's dispel the top 4 myths about USDA loans right now. Starting with number 1, there's no true 100% financing. There's an idea floating around out there that there's no such thing as a 100% financing loan, that you'll always need to pay a decent amount of money at closing, one way or the other. But with USDA loans and VA loans, that's just not the case. USDA is truly a 100% financing solution, which means you don't need any money down to purchase a USDA eligible home. None. This isn't a too good to be true offer, this is just a feature of the program. And the fact that the government is backing the loan. With this assurance, lenders can simply take risks they wouldn't normally be able to take. Everyone has something go wrong. Maybe a lost job, maybe they just fall behind in a payment. A lot of people worry that having any credit problems at all means they won't be able to get a home loan. Those who know more about the industry know that even if you can get a loan, having a lower score means you will pay more for that loan. While this is true with every program, there is some relief from this cycle with USDA loans. For one thing, USDA loans are possible even with credit scores below 640. They're just subject to some closer scrutiny. And then USDA loans don't increase the monthly mortgage insurance for lower credit scores, like conventional loans do. A 600 or a 680, you're still looking at the same low mortgage insurance cost with USDA. In addition, USDA mortgage insurance is now less than FHA in most cases, which of course means a lower monthly payment. Then there's a myth that if you want a lower down payment, you should go with an FHA program. We've already covered part of this one, but let's be completely clear. FHA loans have long been the go-to for a low down payment option. And if you can't afford a 20% down payment, a lot of mortgage professionals point their customers in that direction. However, there's almost nothing better than USDA for this. Like we already showed, USDA is 100% financing, so you don't have to make a low down payment, you have to make no down payment. And finally, the most pernicious myth on the list. The myth is that USDA loans are just for farms and rural areas. While they are good for rural areas, there are also a lot of towns and townships that are in USDA eligible areas. There are even a lot of places just on the outskirts of cities that are eligible. Take this spot for example. We're right on the outskirts of Columbus here, in a nice residential neighborhood that's 3 minutes from Target, Starbucks, Lowe's, 20 minutes from downtown Columbus, 20 minutes from the Columbus airport, and major shopping centers. You certainly wouldn't call that rural, and it's definitely not a farm. In fact, it's the kind of area that's always developing. Those are the kinds of places that no one thinks about when considering property eligibility, but the fact is that many more places than people expect qualify. Click here to check the map for any homes in your area. So, USDA loans are cheaper than most programs on your monthly payment, they require no down payment, they're lenient about credit problems, and they can be used for homes far out or very close to major cities. If you're looking to buy a home but you don't have a lot of money to bring to the table, make sure you're thinking about USDA eligible properties, because you may be able to afford a better home than you thought. So give us a call today to talk about your options. Equity Resources, improving the lives of families.